This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that seems the global soft landing has been achieved. But first, the week ahead will feature some chunky economic data from the world's largest economies, but no first-tier data. This seems befitting of the final week of the summer break in the Northern Hemisphere, which will end the week with long weekends in the US and Canada, both Labour Day. Then after the northern summer, Fickle markets will be back to normal market trading. That often sets the tone for the rest of the year. In the US, it'll be headlined with durable goods orders, another second quarter GDP estimate, which is expected to show an improvement, and some sentiment indexes. In China, it is industrial profits data and August PMIs at the end of the week. India chimes in with second quarter GDP too, and Australia with its monthly inflation indicator. Japanese CPI inflation was at 2.8% in July from a year ago, holding steady for a third straight month while remaining at its highest level since February. Electricity prices jumped and other fuel costs rose too after the full end of energy subsidies in May. However, costs fell for education and communications. Meanwhile, their core inflation rate hit a 5-month high of 2.7% in July. Monthly, the CPI rose by 0.2% in July from June, the least in 3 months after a 0.3% gain in June. In his testimony to the Japanese Parliament, the central bank boss there kept future rate hikes in play this year by turning a potentially messy parliamentary hearing into a relatively straightforward reiteration of policy. These were his first public comments following recent high volatility in equity markets. Since, things have settled nicely in his favour. And Taiwanese retail sales rose 3.4% in July from a year ago, a slight slowing of the pace of increase from June. Meanwhile, their industrial production rose a very strong 12% in July on the same basis, much of it due to strong international demand. This is a big turnaround because you might recall a year ago it was contracting under election uncertainty and People's Republic of China pressure. In China, they've suddenly closed its process for approving new steel plants. That comes after widespread negative global reactions to dumped steel products after a steep slump in local demand. In the past, Beijing authorities required the elimination of existing capacity before approving new plants. Those rules no longer apply. No new steel capacity will be approved now. And China's economic stumbles seem to be having no global impact. In the US, in his widely anticipated Jackson Hole speech, Chairman Powell gave the financial markets clear signals and they reacted accordingly. He indicated the central bank will cut its interest rates on the September 19 meeting, noting that the US labour market is cooling quickly following a softer jobs report in July and the downward revision of payrolls this week. He also said the FOMC has gained further confidence that inflation is slowing to its 2% target, warranting a clear view that it is time to adjust monetary policy to less restrictive conditions. The US dollar sank, equities rose, and bond yields eased a bit more than was already priced in. This week's upcoming PCE inflation gauge, expect 2.6%, down from 3.4% last month, is widely expected to confirm the Fed's expectation that inflation is tracking as they need it. Meanwhile, American new home sales surged 10% in July from the previous month to an annualised rate of 739,000, well above expectations of a 1% increase. It was the sharpest increase in sales since August 2022 and the highest number of homes sold since May 2023. And the July level is 5.6% higher than the same month in 2023. Canada's rail lockout has ended quickly with an Ottawa central government intervention to block the employer action. But just as they did, the union filed notices of strike action on their part to start Monday Canadian time. Meanwhile, after 2 months of dips in May and June, Canadian retail sales rose in July. Canadian manufacturing sales also rose in June, better than expected. In Australia, their right to disconnect law comes into effect today. Employees can ignore contact from their boss outside business hours, except where it is unreasonable. The problem is the law is silent on what is unreasonable. So it's going to be messy until that is clarified, and that will probably require expensive litigation. The US Treasury 10-year yield is now just on 3.80% and unchanged from Saturday. And the price of gold will start today up $2 from Saturday at $2,512 an ounce. That is just below its August 23 record high of $2,514 an ounce. And oil prices are holding at just under $75 a barrel in the US, while the international Brent price is now just under $78.50 a barrel. And the Kiwi dollar starts today still up after its Saturday jump at 62.3 US cents. Against the Aussie was still at 91.7 Australian cents. Against the euro was still at 55.7 euro cents. That all means our trade-weighted index starts today at 69.9. And the Bitcoin price starts today at $64,173 and up a sharp 6.4% from Saturday. Volatility over the past 24 hours, however, has been low at just on plus or minus 0.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.